All right, today is Monday, 16th um, of October, 2023. And right now we are looking at the 1 minute chart for the Euro US dollar. And today's video, I wanted to talk about the quality of mitigations versus versus the inequality, the disquality, the the noticeable difference between mitigations, right? That's the best way I think I can think of saying it. So as I zoom out here, you're going to kind of start to see what I've drawn on here. Okay, higher time frame and lower time frame. This is how I'm able to read the market in a way in which we can see when we've got a mitigation that's actually of value, of worthwhile, and is potentially creating a new low. Okay, it's the higher time frame and lower time frame mitigation that does it, and you can see that we're walking up a ladder here. Now, I'm not saying that this isn't all going to get run. This all looks like it's begging to get run and is begging to become liquidity and is liquidity. Anyone who was long here, right? All of their positions are in there. And so why am I still trading long? Psychology reasons, people will be looking for the shorts, and so they're going to induce the liquidity, the sells. That's one thing that's going to happen, most likely. And what I was able to do is catch an entry right here at the bottom. Now, we don't know if we're really if this will hold or not. I don't know if they're going to come back for more. For example, if you took where was it? If you took this mitigation here, went long, you got a break of structure, you got a secondary break of structure, and yet you still would have gotten taken out over here, right? Price just went below it. And what was the purpose of going below it? Is just to mitigate something a little bit lower. So it's like even if you do get an entry, they could still come and take you. They can do anything, right? The market makers, that's not in question. What's in question is whether or not we're kind of in the right direction. And if we understand the market well enough, then we can, if we do get taken out here, we can always enter at a lower point, at a lower mitigation, when we understand everything in a different set point, right? As price comes down into different areas, we can still understand what's actually going on. So, with that said, the quality of these mitigations are excellent. Okay, so this is what I really wanted to discuss. Higher time frame and lower time frame mitigation right here, right? That this is going to become the primary. We didn't know it until like we broke up over here, but this is going to become the primary. We've also made now this as a primary range as well, since it's just broken over the top. So we didn't know any of that, but we could see that it was happening based upon what was happening on the lower time frame. So as we were, the first break out of a primary was right here. It broke the high over this side, and that formed the very first primary range on the lower time frame, and then they built price upon it. Okay, they built their long position upon it because they pulled back here, and mitigated that higher time frame range, but they also mitigated a lower time frame range in here. So that becomes the higher time frame and lower time frame mitigation. They take out the transitional order block, which is right there, proving to us that this is now a low and that we should expect price to continue in that direction if this is to hold. Okay, now you can then get an entry when they redo it again. They pull back again here, and you can get a repeat entry because they go higher time frame and lower time frame. Here's that lower time frame. Here's that higher time frame, and then you just wait for that transitional order block to go, which is somewhere around here, and then figure out a way of getting back in. Now, in this instance, they didn't come back to this transitional order block. Instead, they created a smaller, lower time frame order block in here, and boom, right here. As soon as they broke structure here, they use that as the new higher time frame. So they come back in. Here's that higher time frame mitigation into the lower time frame, and boom, off and away again. Here's the transitional order block, and so as it comes back in, you see what I'm saying? We can find entries based upon just that. Okay, so as it's walking up like a ladder, it's walking up, it's walking up, it's walking up. We're then just looking for a potential entry, right? And so I've been able to get one over here, and I'm going to talk to the screen or talk to you guys about that in just a moment. But what I really want to talk about was the quality, higher time frame and lower time frame. Notice that nothing is weird, different, bizarre. Nothing is not making sense. Now, the only one that it didn't make sense was this one earlier, and this was right when I was at the screen earlier trading, and this was just a higher time frame only mitigation, no lower time frame in there. And so I drew that, saw it was a primary range, and just knew immediately it was going to become liquidity. So that's why I was holding out for that right there. So we're we were expecting that to become liquidity, is really what I was going to say. And when we initiated higher, I honestly thought that was going to be where we would hold as well, but price didn't. It comes back down, took more than it needed to, and then comes up, breaks through this transitional, all right? And then so we're expecting price to come back to here, aren't we? Whether it does or doesn't, we will see. But that's our anticipation, is for pricing to come back to the most recent transitional order block mitigator. It doesn't always have to. They can do other things, but it's a likelihood because they do it frequently. So here's the transitional, and as we pop through, there's just been no return to it before we've gone long. So now we're getting into the part that I really want to talk about. It's on this other screen here. We're going to zoom out. We're on 1 minute, but we're zooming out. So we've had a high time frame mitigation. Okay, let's go to the 1 hour. Actually, it will explain it much better, or it can explain it a bit better. Okay, this is the 1 hour look. And as you can see, we've been initiating lower prices. Low, low, low. We had anticipated that this would hold, this range here. It didn't. We went over the top of it, and now we're into a different area above it, where we've had the higher time frame and a lower time frame mitigation, and we've taken out the most recent transitional order block. So what do we expect? We expect that price would come back to this transitional order block at some point. We don't know when. It's a 1 hour chart, so right now would actually be a good time for things to come back, since it's initiated away for a while, and this is sort of cause building, come up, mitigate something in here, and then follow through. That's logical, and something that could potentially happen. We don't know if it will or not, but potentially it could happen. So after this mitigation, we fell down, right? Price just broke down. And that's what I want to talk about on the 1 minute. So let's just try and see that mitigation. There it is right at the top. I'm on a 5 minute chart right now. So there's that mitigation right at the top, and it breaks down aggressively. Now, this is the kind of area here that I want to speak about, the target and this kind of dollar sign right there. So that's where we're going to sort of focus our attention, because ever since this point right here, this mitigation right there, we've been higher time frame, lower time frame, higher time frame, lower time frame, higher time frame, lower time frame, higher time frame, lower time frame. It's been walking its way down rather beautifully, okay? And so we were expecting continuation of that, because it was matching. However, clean up my little scribble drawings. Right now, today is the first time where this range has not held, right? So it shows a potential change in character. Now, as I'm looking at a change in character, remember, I've got all of this very strong buy activity. It's very strong. It's perfect mitigation time after time after time. So very good, strong stuff. Whereas on this side, what happened over here? It mitigated nothing special. And that's what I want to talk about. Okay, so we initiated these prices lower, and the first thing that we'd anticipate is to come back up to mitigate again this kind of price here. Instead, they didn't. They then created a primary range that mitigated nothing special. Let's look at that one. Excuse my crazy mouse activity here, but it's to pull us into the correct area. Mitigate nothing special. This was the primary range. This was a small lower time frame, so you could say that this was the higher time frame and this was the lower time frame. It mitigated nothing special. We looked left, it wasn't a primary range, it wasn't anything. It didn't mitigate anything. So you do not trade off of these, I hope. You do not just trade blindly off of that. If you did, well done. I mean, in all fairness, well done. You caught a really good banger of a trade, because you just somehow knew that that was going to hold. But for me, I won't trade it. I'm waiting for this. I'm waiting for a higher time frame and lower time frame mitigations, and that's exactly what we got here. So this is somewhere where we could have shorted. Okay, and as we watch what happens, we could have shorted here, right? And then over here again, and then they walk down the ladder again, right? So they were starting to walk down their ladder on the sells. Now we're getting into a part where the buys are looking as strong as they've ever looked ever, and up here we've got something that says mitigated nothing special. So we can expect this to become cause. If you compare the two screens, we're going to do this really quick. We compare our two screens. I'm going to zoom out, right? Mitigated nothing. Let's clean this up real quick. Let's get rid of these drawings. Mitigated nothing special, and we got some cause on my 1 minute chart, and on the buy side we've got absolutely none of that. There is no high time frame only, there's no cause, there's no didn't mitigate anything special, there's none of that. All that there is high time frame and lower time frame mitigation. Strong stuff. On this chart we've got some funky shit going on. Mitigated nothing special. We've got our cause up here. And so I've been able to identify this kind of area as my target. And that's why I've written TGT, target, the big letters. And what that really is representing is anything that went over the top of this mitigated nothing special is somewhere where I think price is going to come to. Now, do I think it's just going to come to there and halt? Maybe. I have no clue. Personally, I would expect it to come to this higher time frame range, which starts right about there. So it's right in the zone for my target. So right now I am bias is long up until this target area. That's my bias. And that's where I'm going to be taking my profits, right? If we look at my entry that I caught over here, it literally matches up with this area. So that's 1.05735. So it's 5735. Where does that put us? 5735. It's right here, isn't it? It's right on that line. And so that's why I've chosen that as my target. So what is this? It's an 18.6 risk to reward. Whether I get it or not, we do not know. But I'm happy with the trade. I'm happy with the trade idea. I'm happy with how things are unfolding. And I'm happy with my entry. I'll talk about my entry real quick. It's not my typical style of entry, but hey ho, it worked. Okay. So as we're pulling down, now don't forget, we had this higher time frame only. Okay, so we knew that this was going to become cause. This one gets put in and they shoot and rocket out, right? Now, in hindsight, I should have, because I wanted in on this, I could see everything that was happening. In hindsight, I should have entered something like that on a buy stop right here. And price initiated away. It took away from me just too fast, and I was just like left, without an entry. But it didn't let that stop me. So I'm watching what happens because I'm thinking, okay, as they return in here, what am I looking for? I'm looking for them to take out the most recent sell blocks, right? So let's draw on the sell blocks I see. Here's one. Here's the second one. And was this one here? You could argue it. It's so small, it's connected to this one. Yeah, sure enough. So what am I waiting for? I'm waiting for a mitigation like this. And I want them to do what? Take out the most recent range, a sell block. Well, they didn't do that. Instead, they pulled down into this area here, mitigated. And actually, let's pull a nice little label. Forgot to do that. Higher time frame, lower time frame. And then I'm expecting them, if this is going to hold, I'm expecting them to get through this block, aren't I? Right? Why am I expecting to go through? Because that's the last sell block that formed. And so if they are going to do that, I'm going to start seeing buying activity. And so that's what I'm thinking to myself. I should be starting to see some buying activity. And so I draw on my lower time frame, my 5 seconds. I draw on my primary ranges. This is the primary range. You can see on the 5 seconds, the primary range. And also this one is too. This one went over this wick. Let me zoom in. It's hard with my mouse showing it like this. That's why I like this tool a bit more. But you can see that there's a wick in here. There's a break-in structure, and then this comes over the top of it and initiates away. That's a buy primary for me on a lower time frame. So I've got my higher time frame, and I've got my lower time frame. all in one stacked, beautiful little area. And quite often I've found that if we're initiating through a block but haven't gotten through it just yet, when we do come back, we're likely just to mitigate the primary that starts here and also uses one that starts here as well, if that makes sense. So it's kind of like something at the very bottom of the range, the primary range is where they're going to try to mitigate once more. I think it's about getting the best possible prices. Personally, it's what sort of logically makes sense in my brain. But I'm not certain as to why they do it. But oftentimes it looks exactly like this, and they'll literally just mitigate right at the bottom, which they've done here. So we've got this occurring, and so I'm still not willing to enter because even though we might come down, I need more of a signal, right? So now things are starting to make sense. The mitigation mitigates a higher time frame and lower time frame. So let's annotate. Okay, higher time frame and lower time frame, done. The other thing was this was the transitional on a lower time frame. You see that? That was a transitional order block on the lower time frame, and I'd expect price to come to that. So when I see it touching here and then initiate through another one, just delete those. And when I see it initiate through this one, I'm now getting confident, aren't I? I'm now going, oh, we've had a higher time frame, lower time frame. We still haven't worked through this block here, but we're working on it. And now I've got this higher time frame, lower time frame, and they've done something again that makes absolute perfect sense. What does that mean to me? It means that if we can get through this block, then I'm likely to want to go long. And so what I did is just put a buy stop entry right here. So as soon as price broke through that, boom, I'm in. And the reason I did that is to get my absolute lowest possible stop loss available to me, which was a 1.5 in this instance. And so that is how I was able to enter this trade on a buy stop, just understanding what the market was doing. All right. And then, yes, of course, this created a new primary range and everything else, right? This is the whole new primary right here. Buy primary, mitigated a higher time frame, lower time frame. And we'd expect then that this is a primary range that could end up being the mitigation or the next mitigation or one mitigation, or they could use it as liquidity. We're not sure exactly what will happen from this point onwards, but it's a pretty damn good location, I think, to enter the market. Now, I do want to just talk about one more thing, and this is something sort of in the back of my brain, just from previous teachers and previous stuff I've been learning or have learned in the past. One of the things that they would teach me, or I learned, is that you only want to enter in the best possible location. So you could say that this was the most recent range, and we're going to draw it on, and so they'll go, the upper 50 is where you don't enter, and the lower 50 is where you do enter. Like that, this kind of stuff right here. Right, so we'd draw a box on this range, and so we'd only ever take trades in this lower quadrant below here. But if you were to use that logic, you wouldn't have gotten this entry, plus you wouldn't have understood what the market was doing. I just wanted to bring that up because I've seen lots of people talk about that. I think they call it premium discount, right? And I used to be all about it, primary discount, wait for trades in this lower 25% or lower 50, depending on how you're trading. But now, in my current place of understanding, I don't actually hold on to that weight at all. I don't even think that's necessary or a requirement because it's about following intention of the market and understanding price action in its purest form. And if you can do that, then I think you'll be able to catch entries no matter where. So look at me, I'm going for an 18-hour trade right from here in no man's land. Absolutely, you're right. This could get run. Let's wait and see. I've had ones like this absolutely initiate no problem from here and go 30, 40, 50 pips, absolutely no worries whatsoever, 100 pips even. It's not about like they don't always wait for price to come down into the discounts before you can get the initiation. That's all I'm trying to say. Anyway, that's all I want to cover today. There's my trade of the day. Don't know if it'll hold or not, but I'm hopeful. There's all the understanding. Leave me a question if you've got any questions about this trade. And hope you guys are crushing it, smashing it, and living the best possible life. All right, aloha, and I'll catch you on the next one. Peace out.